team.
All right, ladies and gentlemen, welcome back. It is Wednesday, May 29th. Got a little midday chart talk coming at you. The market slowed down, gave us a little opportunity to record during the day. It's 11:10 here on the West Coast, on the West Coast, which means it's 2:10 by Bennett on the East Coast. Bennett, how are we doing today?
I don't know, man. It's a little bearish out there. I'm just kidding.
Oh, sorry. Sorry. We got a great market on our hands. Market's been pumping this month. I think we got pretty much every week in the month of May. It was a pretty fat green week. And it all stemmed from last month's Fed meeting where they announced they would begin quantitative tightening in June. The market was forward looking to that, as in the end of quantitative tightening, or at least a slowdown of it, which is the market's going to take that news as very good, and it did. We've had a really sick month in our hands. We're seeing things slow down a bit. We've got a big PCE report Friday, which is another inflationary number. I think the market's just kind of waiting around for that report right now. There's not a ton of broad participation right now. We're seeing the semiconductors and Nvidia and things like that really run the market higher, but we're seeing names in like the Dow Jones, pull in and things like that. So, let's just hop into the charts before we do anything else. So here's the SPY right here. Here's the Fed day, the Thursday following the Fed day from last month. Right there, we gapped and go to the upside, and the power of gaps. This becomes a huge buy signal as we break out of this consolidation. It's crazy to me looking back that this was the bottom. This like the pure bottom. Things look so bad at this point, and then it's just the bottom since then. We're up 5, 6, 7% since then. So we got this buy signal out of the market. It drove us to new all-time highs. Now we're chopping around at all-time highs, and I'm not throwing on a ton of risk up here in this, knowing that we just had this sick run. So if the market wants to do, one of these, come down here, kind of retest these prior areas before making new highs, I'll be very ready for that. I would personally love to see that action. A little pullback to 520. We've got rates. Rates have always been the biggest concern in this market, and they're pumping higher. They're pumping higher these last 2 days. So, we were kind of hoping this was a little downtrend, but on a weekly chart, this kind of just went inside week and up. So rates driving higher, definitely always going to be an issue for the market. IWM did not react kindly to that. But again, the mega cap tech Qs and stuff, everything's holding up pretty well. But this is kind of what I'm anticipating. I wouldn't be surprised to see a flush lower and eventually a move higher. Just because look around at charts right now, there's not a ton of names I'm trying to buy. Most of the best charts have already gone. And of course, the market is just being led higher by Nvidia, just catapulting higher every day. Unbridled strength. Again, another quarter in a row. Do we see another move like this? I don't know. I'm not trading it, but I'm using it as a gauge for semiconductors and risk for the market. If this pulls in, it'll bring the market with it. There's no question about that. If it pulls in, I would expect it to just pull back and test these moving averages till they catch up and then consolidate. Pretty much what we saw this whole run. But we're not seeing a ton of participation otherwise out there. I don't have a ton of things I'm looking at, so that's kind of my cue to peel back on the risk a little bit. Just holding a few things. I'll go over some charts in a minute, but if there's anything you want to get into.
Yeah, I'll go for a couple things. All right, so again, I've been keeping a big. Let me make this chart a little bigger. So I've been keeping a close eye on the consumer staples. Again, staples were the first sector to successfully, push through the all-time highs, like the base or topping pattern that most of the major sectors were in, going into May. They were the first ones to break out. We saw that last little push, in the S&P and down in the Qs. But as sector-wise, it was like the staples were the ones kind of leading the show. And lately, the past week or two, they've kind of pulled back within the range it was trading in. These orange lines, this range, and we're starting to see somewhat similar across the board with a lot of the other sectors. So I'll show, the Dow Jones, for example. We had these were the prior highs. Let me get like a little arrow to make it easy to follow along here. So again, this was the prior high. you mentioned earlier, like with the S&P, where like that was the bottom, looked like we were doom and gloom, and that was just the bottom, and we rallied higher. And once we got back to these highs, this was, max fear, this is max greed,
Right.
and this is just, technical, trading. It's like people who bought here and sat through this, if you're down 5, 6, 7%, and now you're back to even, your first thought
Yeah.
is like, let me get out. Like, let me get my money back. Yeah.
See you
Like,
later.
give me like, and it's like when you buy it here, you're like, I want to make 10%, I want to make 20%. But then when you hold
Oh
that
shit! Oh
loss,
shit! Oh shit!
yeah, you're like, oh shit. It's not like I don't make money more. It's like, I want my money back. So
Yeah.
this is just normal, like price act, like just normal trading. Just, if you think it's just a human psychology, like, this is not surprising to see. And now we're just back within this range. So if we pull back a little bit more and we start to base out, I think there's going to be a lot of nice potential support buyback opportunities coming soon. But we don't want to be stepping in front of these, these pull-ins. We don't know, is this area going to hold perfectly? Is it going to shake down through this? We don't know that yet. We need to start to see, again, very simply, just some green candles, some green candles into support. And we're seeing that kind of across the board. Utilities, again, that's just profit taking. That's not relevant to the example. We have a few other ones. Let me see. Okay, financial is another one, textbook. This is that prior resistance area, prior all-time highs, pulls in, profit taking. And now it's back within this range. We want to see, is the financials going to stay within this range? Time will tell. But again, with the gap down today, we're not trying to chase this on the way down. We want to wait for it to settle off for a couple of days and find the entry back on the way up. So we're seeing, again, same thing in industrials. I'm not going to do the same story 10 times over, but you can see the retest, profit taking back within the range. And same thing, and REITs and energy just been kind of pretty weak. But on the flip side, you have like tech, with NVIDIA, these names just rocketing to highs. NVIDIA, that this was like a good one where it could be like, I got out of this one before earnings. And then it got, this like phenomenal move. And it's like, oh, if I had it, oh my God, I'd be so happy. But it's like also, if it wasn't NVIDIA and it's a different name and they gap down, then you're stuck with it for months. So for anyone who's still in NVIDIA, it's awesome. Happy for anyone who's still holding this thing. Hopefully they have a stop below this, like 1100. But thing looks crazy.
Yeah.
That is like
Generational.
yeah. If you're short in this chart, my friend, you're having a rough time. Like this is the craziest. This is just insane. Bull flag after bull flag. But let me send it back to you, Shake. If you have any charts or anything, if you could think of, again, I'm trying to put you on the spot even for next week. From the survey we sent, we've got a lot of questions about like when to take profits, how to take profits. So if you have any of those examples, and I think the members would find those.
For sure. Yeah, let's get into the charts. I was going to my account. I had a great month, and I had a ton of trades, but the two names were responsible for most of the gains. And I had like, 10 trades where I made 1%, 10 trades where I lost 1%, and then I have two huge winners where I made a total of 10% on these names, up 10% for the month. I'll go over the trade. It was this PSTG, and the more I learn about myself, this is where I make my gains. When I take big swings with things coming out really tight risk and I have things on my side, and I'm in the name for a bit and I add heavy, and this is where I make my gains. So this PSTG, I could have been a little more patient with the last piece, but I did so well from a percent I risked versus percent I made standpoint that it's not a great lesson, but bought this originally here, kind of added to it in this flag. Then when it tightened up, I could add super heavy through 55, and then my price at the time was 54.10, and I had to stop. What was it? I had to stop. My price was 54.10. And then by the time it triggered on 17,000 shares, 18,000 shares, my stop was 20 cents below my average price. So it's like I'm risking 3, 4K, 5, 6K with slippage. I made over 10 to 1 on that just in this move because I could, track it on the name. And then when the breakout looks so ready, I add heavy through that level, keep my average price low, have my stop super tight. And then, so what I ended up doing was I trimmed at this retest. Trimmed like a third. When we made new highs here, I trimmed some more. The mistake I made was when we had this big gap up, I took the rest of profit here. I don't think, it's too wrong for me to do. because I'm, much more of a momentum trader. I'm not used to really sitting in things for weeks on end. But you look
Mhm.
at this 8-day simple moving average, and that's a clear trail. I
Mhm.
should still have some stock just against this area. So I took the rest of my trade to 62, and it's trading above 62.75. So what I like to do is I'd like to get some kicks off into a strong move. I'll usually take a third off, maybe 3-1, 4-1, 5-1.
Mhm.
But what I've done more so in the recent years is I've gone for bigger kind of risk reward. In the old days, I would just be at 5-1 and I would cut it.
Mhm.
And then the one that taught me the lesson on that, this DraftKings, um, this DraftKings last quarter, we killed this move right here, buying the hell out of this.
Mhm.
Just against the support area. Gives us a nice day one. Didn't sell any. Gives a huge gap up on day two, and I was at let's say 5 or 6-1 P&L here. So I took profit. I was just like, all right, I'm a 5 to 6-1. Let's move on to the next one. When
Mhm.
really I should have just trailed it and caught much more of that move.
Mhm.
So that's the one thing I was trying to work on is, I don't have to limit myself to 5-1. I ended up making 10-1 on this.
Mhm.
And that's where the explosive gains come from. Now, I have a ton of great trades last month that I wasn't heavy in. Like, for example, this Costco was great. Wasn't heavy, probably made 1.5%, and then I take losses otherwise. Those pay for those. I sold that retest. Should probably still be in this one, riding the 8-day too. That's something I could work on wholeheartedly, is trailing things fully with size on the moving average.
Mhm.
But this Reddit was the other one where I really, really nailed. The two trades I got. So here was the earnings right here. Gaps up on earnings. It's on my radar. Surprise revenue growth. Pulls back into the base. So I was just buying 51 versus 50 here. And then I ended up getting out of a bunch this day and then holding on to a core. And I added some because this was an open our partnership. I added some, then sold the rest, and pretty much sold everything that day.
Mhm.
So then I'm just like waiting on a pullback. But I have such a good read on the name that if it comes into this previous support area, I'm much more ready to buy because I have a great cushion in the name. So I
Mhm.
made this one the trade of the week as it retests, this area, the earnings day highs, kind of a muddled area, but has the inside day. And then yesterday we just bought 56 versus 53. And this one's now it's cooking. Now it's cooking. We got great stock in our hands. And I think this one, I'm planning to take some profit here at the 64 area. And then ideally, I have some for this, run to highs if we're blessed with that type of move. But I know it's going to be a bumpy road. And I
Mhm.
know it's not going to be straight up. And so, just kind of sticking with my stock. And now that I don't see a lot of great setups out there, it's either names that are running like Nvidia. Can't
Mhm.
buy that here. My foot's kind of not on the break, but I'm much more cautious in this area where the market's
Mhm.
slowing down. We had a big run. We're seeing all those sectors you showed, staples and everything pulling in dramatically. It's like they're not really looking good for a fresh buy yet. I'm sure
Mhm.
they'll pivot or base out soon, or I'm not sure of anything. But if that were to happen, they would set up some great opportunities. So that's much more what I'm looking for. But as far as a profit taking thing goes, it's sell some into strength so that you can hold on for the bigger move,
Mhm.
and then just trailing it properly. Again, for me, like this PSTG, I should still probably be in it. Definitely working on that and just trailing against this 8-day.
Mhm.
So gotta sell some into strength because if you don't sell it some into strength, you're gonna end up selling into weakness. And just stick to those trails. So that's the two huge pieces of advice. And not really knowing levels, looking left and knowing levels.
Mhm.
Knowing that I was gonna take off some 58, 59, no matter what, it kind of had me, if I can get to that zone, get some off, boom, I have cushion. You automatically feel like that stress release once you get that first kickoff. It's like, all right, free roll. I paid for the trade. Whatever happens, happens.
Mhm.
So that's the one thing is getting that first kickoff into strength and then figuring out that trail and just obeying that trail. Who's really good at this in the chat, it seems like, is Dave Kennedy. He seems like he's in 20 names right now. He's just trailing them.
Mhm.
And it's names we've all traded in the past few weeks. He just stuck with them and kept his trail really well. So that's the number one thing I would say on a profit taking regard. As far as future charts, I'm not seeing a ton out there. I'm looking at this Bitcoin chart as and these are the stocks that trade with it. You know, they don't trade in lockstep, but they trade very, very similar. And if you look at when this chart bottomed in the beginning of May, for example, this MSTR, oh shocker, the beginning of May it bottomed. And then look at this run since it bottomed. Now it's kind of setting up this momentum flag. And if Bitcoin's able to break these new highs into new highs, you know, what do you think MSTR is going to do? Same exact thing. So that's kind of really what I have on the radar. I'm looking at that. We crushed this coin this month. This was another one of the big winners I had. We got involved here. Now it's kind of setting up this base break. But you see the advantage of buying the strongest names at support is something I've really, really worked on this year and focused on because I'm finding my best entries. I try to find the perfect entry now into a stock. And, you know, I don't have to, you know, you see this 240 area where everyone wants to buy, you know, look at the action. It's very, very tricky, very difficult, very whipsaw. I have cushion in the name. So, you know, I don't have to worry about buying this area as much. I think that looks good for further gains, but I think it's going to be really tricky these next few days. So I don't have a lot left, but you know, I like this hood chart. It's still in that kind of stage 2 breakout stage from this huge 15-14 area. Damn, that thing got going. But you see, once a name gets, you know, leaves the stage one base phase, gets in that stage 2 breakout phase, it's just, you know, run, pulls into support, run. And then you focus on these names on the way up. So it's kind of setting up. But again, it's like I wouldn't be surprised at all to market pullback here because I don't really see a lot of charts setting up. As you mentioned, with all the different sectors, it's really not a lot out there right now. So just chilling, hands off. Made some good gains this month. I think June will be pretty promising, depending on how this PCE report goes. But again, just, you know, the Fed is beginning to lighten up on that quantitative tightening starting June 1st. So that's very good news for the market. It catapulted that first run at the beginning of May. Now it runs slowing down. Do we pull back to move higher, or, you know, kind of just keep going higher or sideways? I'm not sure. I got a lot of ammo if things do want to set up, and I'd rather have much more ammo than kind of force things right now where I don't really see a lot out there. That's really, you know, my take on the market right now.
Yeah, I like it.
Parting thoughts you got for him?
This T-Mobile finally broke out after, oh my
congrats,
God. I mean, it hasn't done much, but oh my God. I think I've gotten a gray hair watching this name all year. But finally, let me see. Has it been all year? Yeah. Since January. This thing's flagged on this 166. Got a weekly chart up here. Finally, this thing went. I was like, if I miss this, I'm kicking myself out of the chat. So, you know, for now, it's just, you know, nice little breakout. Again, telecom name, not going to expect fireworks, but, you know, nice, you know, 6-month flag here, you know, almost like 5-6 point range. So we'll see where this thing goes. We'll trail some like weekly lows. Got to give this one plenty of time. It's been 6 months, been setting up. So not watching the intraday ticks of the in and out flows of the name, just letting the name do what it's got to do. So other than that, for the guys and girls that are in the tri-state area, we're doing a little meetup in Northern Jersey on Saturday. So I know Higgins will be there. I know Higgins, Chris Noonan. I know Maurice is coming.
No Chip?
Dennis. No, Chip has plans.
Damn.
Who else? I'm trying to think. Tim is coming back up. Who else? There's a few. So it'll be a fun little night. I think maybe George. Yeah, there's a couple guys. So we'll see. We'll have a good time this Saturday. So if anyone else wants to come, just shoot me a message and send me the information. So not trying to put my address out in the streets out here.
Yeah, no, you don't want that. You don't want that. Parting thoughts, you know, big PCE report Friday. Well, you know, next inflationary number for the market. All of these data points obviously have you know, catapulted the market higher in the last month at least. We had like a 6% pullback in the S&P. It began to, you know, give greater fears to we get a correction finally, and, you know, it just got bought up and we're back at highs. Wouldn't be surprised to see, you know, a little bit of weakness these next few days as things set up, but, you know, market's moving really well as a whole. I think we're set up for some good charts in the future, just kind of hands off right now. Anything else? Is that it?
That's it.
Favorite part of the show. You guys, you know, you gotta like, you gotta subscribe, you gotta comment, got some questions, you know, we're here for you. Other than that, you know, catch you guys next week.
All right.
If you think you're going to get rich overnight trading, we're not for you. If you don't want to read daily or weekly to improve upon yourself, we're not for you. If you're not interested in saving weekly and building your accounts for the long term, we're not for you. If you're not looking to improve yourself daily, we're not for you. If you do want to build wealth for the long term, read weekly, save weekly, do all the right things for the long game, then we might be for you.